Good morning. You're watching Business World Live. I'm Danie Laurel. It's the start of a new trading day. Let's kick off with our top story. Foreign direct investments fell to a 5-year low in 2020. That's on the back of economic downturn brought about by the health crisis. Data from the Banco Central showed that FDI net inflows shrank by 24.6% to $6.5 billion last year from more than $8.6 billion in 2019. This figure is the lowest since 2015's $5.6 billion FDI inflows. However, the 2020 performance exceeded the $6 billion full-year projection made by the central bank. The BSP said the slump in FDIs was caused by the disruptive impact of the pandemic on global supply chains, as well as the weak business outlook that had adversely affected investor decisions in 2020. ING Bank Manila economist Nicky Mapa said FDI inflows slowed as the Philippines may no longer be a bright investor destination due to what he called as fast-fading economic prospects. Mapa warned that the COVID-19 pandemic will continue to dampen the outlook for foreign investments. He said the only strategy to increase the country's attractiveness as an investment destination is to get the economy back on track while quelling the pandemic. Okay, guys, a quick check on the local unit. Our peso here trading at 48.505 amid that renewed FDI print. You can see it actually trading sideways. In the past month, we were getting a report towards the end of last year that we would be breaching the 47 levels, but we have not seen that so far. Yet, we are strengthening a touch, at least this morning, by 0.10 centavos. Now, shifting over to equities and taking a look at how our markets are opening this morning. Recall that this comes after yesterday. We inched a little bit amid the lowering, at least, of cases compared to the previous 3 days wherein we were breaching 3,000 levels. We're back to 2,000 levels. This is what analysts had said had brought some optimism to the market. However, that optimism seems to be waning quickly. We are down by 0.4%, back to 67.79. 0.38. Meanwhile, we have more earnings to report. This from San Miguel's Food and Beverage. Their 2020 net income hit 22.4 billion pesos. This is on the back of revenues down by 10% to just over 279 billion pesos. Now, on the upside, they compared the second half of the year in 2020 to the first half. And they mentioned that the revenues rose 27% when you compare the two periods. The main profit was really driven by the brewery. So that posted volume growth in the second half as the liquor bans were lifted. And in fact, that brought the consolidated operating income jumping by 94% compared to the first half. Now, according to President Ramon Ang, the worst of the pandemic is over. Company looking forward to 2021 with optimism. Food and beverage up by 40 centavos. That's up by 0.6% this morning. Now, I want to focus on the telco side and also the broadband internet side. So really on data companies here. Kicking off with Dito Telecom. They have just received, or at least the Senate Committee on Public Services on Wednesday has now approved the franchise renewal application of Dito Telecom for another 25 years. It's going to be expiring on April 24th, 2023. And as of how many subscribers so far, recall that they launched on March 8th. As of March 9, they had about 7,586 new subscribers or SIM card purchases according to the company. Dito still trading in the green. That's up by 3.3%. Recall that that saw quite a slide yesterday. However, you've got another newcomer, and that is Converge. They are saying that the opportunities that they see are not necessarily in mobile internet, but rather in the broadband space. Now, they're targeting the masses that are lacking broadband internet. They're saying 90% of the Philippines has or still not with high-speed internet, and they said that the market is too big for all the players and they will be going to the underserved areas. They are saying 60%, this is from World Bank, 60% of Filipino households don't have access to the internet. It's still and this despite the fact that we are social is saying that we are home to the world's heaviest internet users. They say that compared to mobile data, fixed broadband is still more stable, and now with people working from home, they believe that the future of broadband is still fiber. They were also saying that there are 150 million mobile phone connections in the Philippines, saying that at least people, Filipinos, now carry at least two SIM cards. So she's saying that that market is quite penetrated. Taking a look at Converge here, that's up by 1.7% this morning. We've seen some of the highest unemployment figures on record during the pandemic, and with cases seeing a fresh surge, is the back to work scenario threatened anew? Here to talk to us, we have with us Asek Nikki Tutay of the Department of Labor and Employment. Good morning, Asek, and welcome to the broadcast.
Hi, good morning.
Ma'am, the Jan unemployment print was 8.7%. Of course, we've been expecting quite high unemployment figures to be continuing at least for the next few months. But is this better or worse than what you were expecting?
This is actually better if we compare that with the 2020 figure. We closed 2020 at an average of 10.2% unemployment rate for the 4 rounds of surveys conducted last year, and that's about 4.5 million unemployed. So this January is better than our performance last year. But if you compare that with the October round, it remains unchanged, but there's a slight increase of about 200,000 workers being unemployed. But the good thing about the January round is that 1.6 million 1.4 million net employment has been recorded as well.
Okay, ma'am, how will these figures change in the near term, especially with graduation season and fresh graduates, of course, having struggled through a year of online courses, so to speak? Is there going to be room for them to be absorbed into the employment space?
Okay, it's going to be a very tight market for this year because the new entrants to the labor force will be joining the job search, and they will compete with those unemployed last year, plus those who will be returning back to the labor market. So it's a pretty tight competition among these segments of the job seekers. But we're hoping that with the reopening, safe reopening of the Philippine economy, then there will be more opportunities for our people.
Ma'am, how long will it take to even just recover the lost jobs? So we're not expecting, giant leaps here of reducing unemployment pre-pandemic figures. Just generally having recuperated these lost jobs, and how do your agency's targets align with these new figures?
Hopefully by end of 2021, we're close to the target of lowering really the unemployment rate, and probably going back to the pre-pandemic would be next year.
Okay, by next year. Will this happen, ma'am, even if there's no additional stimulus that will be passed this year, meaning in terms of handouts and ayuda? Does this, is it okay just as we are doing status quo, reopening the economy with the vaccines in place without additional handouts?
Okay, looking at the employment gains, there's already a peak in terms of construction sector, the government sector, health and wellness, and including the IT BPM sector. So these are the resilient sectors that will really drive our employment situation for this year. So even without, for instance, the needed additional stimulus, maybe we can manage because vaccination program is already picking up as well.
Okay, ma'am, to what extent have you been able to already provide this ayuda, especially to the MSMEs, and to what extent can they still expect more help in the coming months?
Okay, for Dole alone, we are able to assist about 4 million workers from the Bayanihan 1 and 2. And there's still an ongoing stimulus for workers in the tourism sector to the tune of about 2 billion. What we are pushing at the moment is the wage subsidy program, which is tied up to employment preservation of the companies who are under current temporary closure and who may want to reopen as it is more safe now to to run the business, coupled with the zero or low interest loans that's being provided by the DTI's SB Corporation and CARES program.
Okay, so still some room actually for businesses to maneuver. Still waiting on those that amount that you've already set aside. Ma'am, you mentioned the vaccination, and of course those plans are finally underway and being rolled out. But now we've also seen a surge recently in the cases. How do you balance vaccination plans back to work with the number of rising cases here? Is there some sort of plan when cases reach a certain number of level, you should not encourage the back to work or reopening of the economy? How do you pivot amongst these two things?
I think the track now is really to instill discipline among our people. They should strictly enforce, or they should strictly observe physical distancing, proper wearing of face mask and face shield, because that's the only way that we can safely perform in the labor market. The other thing is the vaccination program. There's a priority list, and our secretary is pushing for the minimum wage workers to be vaccinated as well. And I think we're getting there once more vaccines will be made available to us. We're also looking at the strict compliance of the workplaces in terms of the DTI and DOLE guidelines on the safety protocols, on the ventilation.
Ma'am, are we ready in terms of public transport for this back to work?
We are pushing for the 100% of the public transport because it also prohibits our workers from like going back to work or in the labor market.
Do you think this will be happening anytime soon, despite the current surge that we're seeing in cases, ma'am?
We leave it up to to DOTR, and they were saying that they have already opened the lines for about 80%. So we're hoping that it reaches 90 to 100%. But of course, safety measures should be also put in place as well.
Okay, so reopening of the economy can actually still happen despite this surge if safety protocols are in place.
Yeah, because we cannot afford to go on a lockdown again, a hard lockdown, and the economy suffers. So I think it's really instilling the discipline among all of us.
Okay, so tama na the lockdowns. It's really a matter of adjusting to the new normal situation. Ma'am, our banner this morning was the FDIs, which were slumping. Of course, at least in the month of December, 63% down. And also we've got remittances. To a certain extent, they were doing well, and then now it seems to be paring back down. Tell us, how does this affect the labor market? Do we have a strong reliance on foreign investments to keep our employment rate up?
Of course, it can contribute to the employment situation in the country, because more investments coming in would mean also employment. But we also have to bank on our domestic enterprises to push for creation of more employment. In terms of the remittances, it's not as huge drop as is expected. So we're hoping that it's gonna be manageable and also helping us in our labor market.
Okay, so a focus on the domestic market might be able to absorb the downtrend that we're seeing in the foreign direct investments. Thank you so much for those insights. That was, of course, Asek Nikki Tutay of the DOLE. Checking in on the other headlines we're keeping our eyes on, BIR collected 134.27 billion pesos in February. That's barely exceeding its collection goal as economic recovery remained sluggish. The agency earlier set its February target at 134.18 billion pesos, and while the actual collections exceeded that by 0.7%, 0.07% rather. February collections were still 5.6% lower year on year. Recall that February 2020 was the last month of the so-called old normal before the coronavirus lockdown led to the closure of many businesses and a slump in consumption. It remains to be seen whether collections will pick up fast enough in the coming months for the BIR to meet its 2021 target to collect 2 trillion pesos, which is 7% higher than its actual collection for 2020. Drug makers warn that further price controls on their products will prevent the industry's recovery. This comes after the House of Representatives started deliberations on two bills that are seeking to establish a drug price control board. The Pharmaceutical and Healthcare Association of the Philippines said such policies will be an added burden to the industry on top of the difficult economic environment. PHAP believes that imposing price controls is retrogressive and may discourage investments for pharmaceutical companies. Instead of controlling prices, the group said that the government should focus on ensuring the availability of quality drugs. This after past price caps discouraged the entry and restricted supply of innovative medicines. The Toy Manufacturers Association of Hong Kong is considering moving and expanding in the Philippines due to rising production costs in their area. To attract investors, the Trade Department touted the possible reduction of corporate income tax under the CREATE bill. This is on top of free trade agreements and preferential trade rates with countries like Japan, India, Australia, and New Zealand. The Philippines currently hosts 125 toy manufacturers, including Mattel, Bandai Namco, and Dunlop. If Hong Kong's Toy Manufacturers Group agree to relocate to the country, this will add 250 more companies to the Philippines' lineup. Despite the pandemic, the toy industry in some countries grew last year. That's partly due to the growth of online shopping worldwide. And that's a look into the business day. Today's Thursday, March 11, 2021. Catch Business World Live for the market close. It's at 3:15 p.m. today. I'm Danie Laurel. Mask on, wash hands, and stay safe, Philippines. We are One News.